You gotta be flipping my flapjacks. What a week it was this week. A new all-time high in the history of the public account here today. I'm sure a lot of you guys are hitting all-time highs in your portfolio. Let me know in the comments section if you hit a new all-time high in your portfolio this week. I would love to hear from you guys. I'm sure a lot of you guys are hitting all-time highs. Wynn Resorts up over 20%, about 21% just in the past 5 days. Absolutely incredible move for Wynn Resorts. Estee Lauder up about 18.8% in the past 5 trading days. These stocks have been thrown out, and man, are they coming back to life like the Undertaker. Palantir Technologies, huge. This was a huge win, in my opinion, for Palantir this week. This was definitely a week where Palantir was set up for potential downside now that the S&P 500 inclusion has actually happened. You know, you got to assume a lot of people had been playing that going into it. Obviously, the stock was rallying huge, 21% in the past month, and this was definitely a week that was setting up Palantir for a big drop. And we didn't even get it, which is as good news as we could possibly get. But, folks, a lot of people are saying it's about to get scary. Halloween, October, it's about to get ugly, folks, okay? A lot of people are saying stocks are going to go down big in October for many various reasons. We're going to have an actual stock market crash that's going to occur in October. So what I want to go through in this video is, do we have the mixture? Do we have the ingredients? Do we have the potion to get a major stock market crash in October? Or is this just a bunch of more of bear hype and excitement from them thinking they're going to get a crash and keep pushing it out, and October is going to be the month, right? We know on seasonality, they have a case. Seasonality many times can be very bad in October, especially in election years. So they have a case there, but we're going to see, do we actually have the ingredients to actually get the stock market to go down substantially in October? And should we be looking at puts? We got one trading day left in September. Should we be looking at put options for this month? We're going to figure all that out in this video. Appreciate y'all joining me as always. Hope you enjoyed this very in-depth video, taking you through everything you got to look at for something like this. Appreciate y'all being here. Listen, I got a question for you. Are you subscribed to the channel? If you're not, you might want to hit that subscribe button. Number 2, are you in the Smash Club? If you're not in the Smash Club, you might want to consider joining today. It's absolutely free to do so. All it is you got to go down there and hit that like button. It feels so good. It feels so good to just hit that like button, man. It feels amazing. Got a brand new workshop. Well, not brand new workshop. It's about a month old now at this point in time. Created it, I believe it was last month. 7 things to do when stocks are crashing. It's a free workshop for you guys. I'll put that as pinned comment down there today. In case the market does tank in October, at least you know what to do. I've been through 3 stock market crashes in my life. Great financial crisis when I got started, the Rona crash, and then the 2022 crash, which was vicious for the NASDAQ. It was down about 37% in less than 12 months. And then I also been through a lot of, decent-sized corrections, including the end of 2018. Anybody remember the end of 2018 crash? We were on pace for the worst December since the Great Depression. It was a horrible, man, that was rough. But anyways, yeah, that should definitely help you out immensely. Make sure you grab that before today's video is over. It's a pinned comment down there today. I don't shout it out much anymore, but I thought it would be appropriate kind of free workshop for you guys on a day like today, okay? So let's get into this. First ingredient, we got a big bad boogeyman, and his name is inflation. Now, this big bad boogeyman, he's kind of been going dormant. He's kind of been going dormant now at this point in time, right? But will the big bad boogeyman of inflation, which is what really caused the stock market to tank in 2022, right? Inflation went so high, the Fed had to raise rates aggressively. It obviously hurt the economy. It certainly hurt a lot of company earnings. A lot of big tech was overhired. They had to fire a lot of folks, and then they got back on the right track starting in 2023 and in 2024, right? But could we have inflation problems that lead to the stock market to, let's say, have a major dip or crash in October? Well, just today we got out some new data here. The PCE price index, a measure the Fed focuses on to measure the cost of goods and services in the U.S. economy, rose 0.1% for the month, putting the 12-month inflation rate at 2.2%. Excluding food and energy, core PCE rose 0.1% in August. That was up about 2.7% from a year ago. The all items inflation gauge was below Wall Street estimates and the lowest since early 2021. This was horrible news for the bears here today. The bears needed this report to come in hot, meaning essentially they needed inflation to be coming in, worse than expected. They needed that. They were hoping for that. They were banking on that. And so the fact that inflation came in tame, that's not good for the bears at all. They needed this to come in hot, because if this came in hot, then that would send basically a signal that the Fed cannot continue to lower rates at 50 basis points. They got to slow the process, right? And that would lead potentially the market to sell off. So a lot of bears were banking that, oh, this report's going to come in really hot. I don't know what they were banking off of other than hope, because there was really nothing you had to bank off of that this was going to come in, this report was going to come in very hot. There was no data that would have shown like, oh yeah, this is why this report's going to come in super hot. It was just basically a hope and kind of prey approach in regards to the bears, and that's what they did here. And clearly, that's certainly not working out here, right? Now, we might want to look further than that. So let's look at commodities. Well, here's the deal. This is GSG. Everybody should track this. If you have any sort of stock tracker app or whatever on your phone or on your computer, everybody should always keep track of GSG. GSG is going to let you know if you got big inflation problems coming down the line or not really, because this keeps track of overall commodities. Commodities are asleep. This is the past month for commodities, down 2.2%. So we don't have any sort of major commodity inflation that all of a sudden is going to hit in October and everybody's going to say, oh my gosh, this is insane. This is such a problem. So we don't have that. If we look at oil futures, is all of a sudden the price of gasoline going to cause everybody to freak out? No. Look at this. This is on a 1 month basis. The price of oil is down 12%. 12%. This is what we call 6 feet deep, and it's in the coffin at this point in time, right? Could come back to life next year. That is something to be aware of for next year. But in terms of in the short term, in October, gas prices, is that going to be some sort of big issue? Nope, not whatsoever. If we look at trueflation numbers, which I trust trueflation numbers more than the government data, but when we look at trueflation numbers, we're at a CPI right now about 1.5%. In U.S. government numbers recently, which are very backwards looking, are around 2.5%. So inflation's dead, completely dead at this point in time, right? If we think about housing, inventory on housing is going up and up and up. I'm seeing it more and more. I keep track of Phoenix and Las Vegas specifically. I'm seeing inventory go up more. I think these numbers are going to be up even more in September. And if you have more and more inventory coming online, I can tell you that's not going to be great for price increases. So in my opinion, I think we're still kind of setting up for either a deflationary environment when it comes to housing and rents, or very flattish. But we're not set up for like some sort of big skyrocket in the short term in regards to this. 2 years from now, 4 years from now, could be a totally different story. But if we're just thinking about the very short term, we're not setting up for that at all, right? If we look at mortgage rates, we're still insanely high when it comes to mortgage rates. We're still 6% plus, which is insanely high for any time in really the past 15 years. You got to understand, everybody has been programmed for basically the past 15 years to expect a 2.5% to 4.5% mortgage rate. When you're at 6% plus, you're not going to magically make everybody go out there and want to buy homes. And so this is why you could continue to see inventory pile up in the housing market, and why you're set up more likely for a deflationary environment in housing for the next 12 months than inflationary. So if you're thinking about, remember, we're thinking about October specifically, and the stock market crash we're going to have in October, right? Okay, is housing going to be an issue? No, it just doesn't set up to be an issue at all. If inventory was going much lower and we had, if we had mortgage rates at 4.5% right now, I'd say, ooh, man, maybe we get some housing inflation numbers that people aren't too happy with, but we don't have it. So if we think about it, we don't have the ingredients. We do not have the ingredients for inflation to go insane in October and cause some sort of dramatic worry and concern from the market about, oh, inflation's back or inflation's coming back and you better watch out, you better not cry, you better go not buy anything inside. I mean, that's just not realistic, right? So inflation, that boogeyman, he's asleep. Next one up here, earnings season. Earnings season could always be a catalyst to send the market much lower, right? And we do have earnings season. It will be kicking off in guess what month? October. So you could look at earnings season and say, oh boy, that's where our problems will come in. When the earnings start hitting, they're going to be bad. Well, earnings start out with the banks, the big banks. Listen, a lot of these big banks just were at a conference about a month ago. And from what we heard from a lot of these big banks, there's not a lot of scary talk. And so if you're thinking we're going to get some magical, scary talk, some horrible numbers from JP Morgan and Bank of America and Wells Fargo and all these companies, it doesn't look like it yet. Could it happen maybe the following quarter or the following quarter? Sure, that's always, but we're talking about this month. We're talking about October. Are these companies' guidance going to be some horrible guidance numbers? that is going to freak the market out big time? Probably not, just to be quite frank. The banks are pretty well in a pretty good position. I think one of the most knowledgeable people that are not a banker, right, but knows the banking space insanely well is a gentleman from The Big Short movie, right, Steve Eisman. He's gone on CNBC several times in the past few months, and I think he knows the banking system way better than I do, or anybody watching this video does, or more than 99.99999% of people out there, right? And Steve Eisman says there's really no issues with the banks. They're not exciting stocks to buy. And he's like, I wouldn't buy them because they're not exciting. But he's like, there's no issues with the banking system whatsoever. They're just going to kind of keep reporting their numbers here in the short term. They're going to be just fine. I think, once again, that man is more knowledgeable on the big banks than anybody. And when he comes out and says, there's really nothing going on there, plus you get the confirmation from the big bank CEOs, you got to take it for what it is, right? Doesn't mean there can't be problems a year from now or 2 years from now. But for right now, there's nothing. And so if you're banking that these earnings are going to come in horrible for the banks to start out earnings season, that might end up being a very, very tough bet to take that, right? Then you say, well, what about the other companies? Well, here's the deal. We're not going to get the real companies that really matter for the stock market. Who are they? They're big tech. They're Tesla, they're Microsoft, they're Apple, they're Google, nvidia, Meta, Amazon, all those sorts of companies, right? And those are all the big dogs that matter. Salesforce, you go down the whole list. Well, here's the deal. We're not really going to get those company earnings until the end of October, going into November, really. From basically the last week in October through November, that's when we'll get a lot of those company numbers. So if you're banking that, big tech's going to send the market lower, which, by the way, big tech numbers should be pretty dang good. So I wouldn't be banking that big tech's going to report some disastrous numbers and guidance. Just be a little careful about that, especially we're in election season. Spending big on Google and Meta, I just would be a little careful about trying to bet heavy against big tech. But even if you did think big tech's going to report trash numbers, we're not going to get those numbers likely in October. We're likely getting them in November or the very end of October, right? So I think it's a tough bet to think earnings are going to destroy the market when we're likely not even going to have the big earnings that you really want until like the end of October, November. And like I said, the only ones that could really tank the market are the big banks. And I just don't know if the big banks' numbers and guidance are really going to be something that's going to be like, oh my gosh, everybody's going to freak out and sell the whole stock market because of bank earnings. It just doesn't look like it's that sort of setup for right now, at least, right? So that's when it comes to earnings. Then you say, well, what about sentiment? Could we have sentiment tank in October? Sentiment's been riding high. We can't deny that. Nearly 50% of stock market participants are bullish on the market for the next 6 months. Very, very bullish. Now, there's two ways we can look at this. One, we can say, well, this is way too bullish. This needs to be more bearish. And so therefore, because we're way over the historical average for bullishness, we're way under the historical average for bearishness here, right? So you could say sentiment needs to come down big time. This is more proof that the market needs to tank, and if we also get investors start going the other way, we can get it going fast. Well, yes, but in order to tank sentiment, you've got to have some sort of fundamental problems that really tank sentiment, right? That then can tank the market. So it needs to be like inflation's going high, the Fed's not going to continue to cut rates, or they're going to raise rates, or earnings are super bad, or unemployment's going. You need to have something there. You can't just have sentiment go bad for no reason. It has to be reasons, right? So you could look at it, but you could look at it from that negative angle of like, well, we need to go more bearish, so this is just naturally going to go more bearish. But an additional way we could kind of look at this is, if you're this far bullish, it's going to take you a while to even get investors to start feeling bearish about the market. It is not going to magically happen in a matter of a few weeks. It's going to potentially take months to get folks from the bullish side over to the bearish side, right? And so that's just another thing that you could look at, and it's like it's hard to really see the market going down substantially in October based upon sentiment there, right? Then you say the election. Well, guess what? That could potentially tank sentiment. But that's not till November. So we're not getting those results this month. Or excuse me, not this month. I'm still recording this in September. In October, the month that everybody thinks the market's going to tank, right? We're not getting those results then. We're getting them in November. So this could tank sentiment. I'll be honest with you guys. If the election is too far on one side or the other, what do I mean by that? If one party seizes control too much of the House and the Senate, and let's say, becomes president, the market could go into a big sentiment problem in regards to that. The biggest worry for the market is that Harris would win, and it would kind of be like Dems would just dominate this election, essentially. That would definitely cause the market to, I'm just going to be honest with you guys, have problems in the sentiment. That's not the belief that's what's going to happen, though. There's a belief that things are going to kind of be split up, and you're kind of going to end up in gridlock in Washington, which is actually what the stock market wants. So what stock market wants, big investors want, hedge fund money wants, they want gridlock. So they don't actually care that much who wins, who becomes president, whether there's T-Man or H-Woman. I don't even know if that's a weird thing, but whatever. They don't really care as far as that goes. What they really care about, they want gridlock. And if you listen to a lot of these big Wall Streeters, that's what they're talking about. They want gridlock, and that's what they also expect. But if you didn't get that, then you could talk about sentiment tanking. But once again, we're not getting that in October. So if you're banking on this October stock market crash, that's tough. Could you get a November stock market crash? Yeah. If the election goes one way, people might freak out and sell stocks heavy, but we're not getting that this month, right? Then you say, well, maybe we'll get big margin calls. Maybe we're out of control when it comes to margin stock. We saw investors are insanely bullish. They're not feeling that fearful out there. And so when you have a lot of people feeling very bullish and not very many people fearing that bearish, you could have margin problems, right? Well, what does the data say around this? Okay. Well, if we look actually recently, we actually went down in regards to how much money is basically out on margin, which is phenomenal news if you're really worried about like margin calls and those sorts of things, because stock markets hit new all-time highs this week with margin over the past month at least being actually down. That's like ideal. That's an ideal situation. Now, additionally, if we look here, right, we're basically lower when it comes to the amount of margin out there. We're lower than we were 3+ years ago. If we go back here to, this is December 2021, at about $910 billion of margin outstanding versus under 800 here recently. And if we go back to February 2021, $813 billion on margin versus 797. So the margin numbers, I'll just be quite frank with you guys, it doesn't set up for some sort of margin call epic situation where everybody's getting margin called left and right. Now, if we look back to the great financial crisis, I would almost guarantee you 99% of you guys watch this video, you've never seen what I'm showing you right now, okay? This is big time. I'm showing you the data on how much margin was outstanding prior to the great financial crisis and then in the great financial crisis. And so if we look here, guess what? Margin debt hit an all-time high right before the great financial crisis. This was literally the top of the stock market in 2007. The stock market hit a top in 2007 in the summer, okay? And right around July. And right then, we had margin debt outstanding, all-time highs. All-time highs. And then we had all-time, well, I don't say all-time lows, but multi-year lows right here in the bottom of the market. So that's fascinating, right? The bottom of the market, you have multi-year lows for margin debt outstanding, and then right before the crash happened, you had all-time highs in regards to margin debt outstanding. So we're not in that situation, right? Which makes you feel rather comfortable. If we were at $1 trillion plus right now in margin debt, you should be much more concerned about margin calls hitting, because that would be a little scary, right? But we're not even remotely close to all-time highs in regards to margin debt. We could get there 6 months from now, a year from now. That would make me very concerned, but we're not there right now. And keep in mind, the stock market's much higher today than it was back in these sorts of times. Like look at where the Dow was back in February 2021. Look at where the S&P 500 was. Look at where the NASDAQ was back here versus now. It's substantially higher now. And we still have substantially less margin debt outstanding, which means the margin call scenario, not super realistic for right now, at least, right? So I like that setup as far as that. Very good. Now you say recession. What if the recession talking amps up? That could bring sentiment down in a major way, right? Everybody starts talking about recession. Well, here's the deal in regards to the recession talk. This would not be something new. The recession talk's been ongoing. They beat it to death, right? They talk more and more about recession talk, right? Over and over again. And not only that, this has been talk since 2018. Literally, we've had consistent recession talk since 2018 now. At the end of 2018, everybody's talking about recession. 2019, same thing. 2020, it actually happened, but a lot of people don't count that as a real recession. Why? Because it was government shutdowns and they did the big stimulus pump, blah, blah, blah. So a lot of people don't even look at that as a recession. Then we had 2022, obviously, all the recession talk there. We actually had a recession, but they didn't call it a recession because they like to change the rules as we go, whatever. Then 2023, recession talk. 2024 this year, nothing but recession talk, recession talk. At some point in time, people are just going to get more and more immune to even recession talk, right? And at some point, they're going to stop caring. By the way, when everybody does stop caring about the recession or stops talking about it, that's when it's actually going to happen, just so you're aware. But for right now, everybody's still talking about it, but it's like just over time, even if people talk about recession in October, they're just going to drown it out because they've been talking about that. It's nothing new. They've been talking about this again and again and again and again. So people are just like, whatever. It's just what ends up happening, right? Unemployment rate, is the unemployment rate likely to skyrocket in October? Not super realistic in terms of that, right? So, I mean, could we see the unemployment rate go up to 4.3 or 4.4%? Sure, we were just at, 4.3 or 4.4 not that long ago, just a month ago. So it's a potential. But then after that, you go into holiday season, right? And you start hitting those holiday season numbers, all the seasonal jobs. So, man, that's tough to really... That's a tough bank. That's all I'm going to say about that. It's tough to bank on unemployment rates skyrocketing in the short term. Could unemployment rate go up over the next year? That's a possibility, but is it going to magically go up so much in the next month it's going to cause a stock market crash? I don't know about that. And here's why. The red line here looks at job openings, right? Obviously, it's come down massively over the past 2.5 years. We know that, right? But we still have a really high number of job openings, like really high number. So everybody that's banking on the big unemployment recession, you got to understand we need the amount of job openings to come down substantially still from here to really get the massive unemployment cycle, right? That unemployment cycle that people are so fearful of, the 7%, 8%, 9%, 10% plus unemployment numbers, that could eventually happen, but it's not happening in October. It could eventually happen, but you need job openings to still come down way more than what they've come down. So we're just not at that place that you really need to be. Then you might say Japan, right? Japan sent the stock market down massively at the very beginning of August. And you might say, Japan could be the issue. Could have the yen carry trade could be a problem again. It's a possibility, but it's not super high probability. Usually when you get these freak situations, they're kind of a one and done. They're a shock and awe to the market, and then it really doesn't affect the market much after that. And that's usually for almost everything. You could even look at Silicon Valley Bank. Remember when SVB Bank went down? It was a huge kind of shock and awe for the market in that very short term, and then we just got over it, and that was what it was, right? And even when some other regional banks had some problems after that, it wasn't really a big deal for the market. So could it cause a problem? Sure, but it's not a super high probability here to cause some sort of major problem in October, right? Then you say the Fed. Maybe the Fed's going to screw this all up. Maybe that's going to be the problem. Well, I'm sure there'll be plenty of these Fed officials coming out and talking in October. That's what they like to do. I'm like, geez, they talk more than anybody. It's ridiculous. But in regards to the Fed meetings aren't till November. So we're not going to know if the Fed's going to cut 25 for their next cut or 50 for their next cut, right? And then depending upon whether they cut 25 or 50, you can make a debate. You can make an argument either way in regards to that it's good or bad. Let's say they cut 50, you might say, well, okay, they're lowering rates even faster. This is great news for the market because rates are coming down, which means, obviously debt gets cheaper, all those sorts of things. People could get excited about that. Then you could say if they cut only 25, then the bulls could say, oh, see, this is proof the economy is doing great. We don't need to keep cutting 50. This is great news. So bears could flip it on the other way too, right? So it's really in the eye of the beholder on whether they think a 25 or a 50 is good. But the moral of the story is we're not getting that till November. So once again, if you're worried about like a tanking of the market, we're not going to get what we need to get until November. So in October, once again, like could the market crash? It's just, if the Fed's going to cause a crash, how are they going to cause a crash when they're not even meeting in October, right? Now, seasonality, right? Remember, we're the red line here, right? Over time. This looks at the stock market seasonal patterns from 1949 to 2022, and we're in an open field situation here, basically, right? And so if you look, usually the market tanks. But guess what? It usually starts tanking in September and then continues to tank into October, bottoms out, the end of October, starts to come back to life, does a double bottom basically in November, and then comes back to life for real, right? So looking at that, the seasonal patterns would say we're in a situation where the market should, in theory, tank in October if we're going to play this out how we usually play it out. But here's the issue. We should already have tanked the market. The market hit all-time highs this week across the board, Dow, S&P, NASDAQ. So if we hit all-time highs and we should have already been tanking this market, it's not playing out how we usually play out here, right? Which, if you're then banking that October the market's going to tank, just be careful because September the market was supposed to tank and we didn't get the tank, right? So that's something to keep in mind there. This looks at S&P 500 monthly returns from 1928 to 2023. And what we're going to see is September, generally a very bad month. And it wasn't. It was a very good month. October is actually usually a good month for the market. It's usually up, right? Now we can say on election cycle, it's usually down. Sure, that's fair. But usually the market's up in October, right? Now, you could also say, why would traders dump, right? First off, are longs going to dump? Like real investors? Probably not, because they hold through any of these situations. So you're really counting on traders. Why would traders dump out of stocks in mass in October, right? If November through January are usually great, because November is usually a phenomenal month for the market. December, phenomenal month for the market. January, phenomenal month for the market. That's just typically and in seasonal times. So why would investors dump out of stocks in mass in October when they basically know that the market usually goes up substantially November, December, January? That just wouldn't make the most sense, right? Think about that for a moment. And also remember, a lot of these people believe that after the election, the market's going flying. So, I mean, could you dump your stocks in October? Sure, but then when are you getting back in? The very end of October? Well, that creates buying pressure. Are you waiting until the first week of November? Like, when are you waiting for, right? And so I think it's hard to dump your stocks in October if you believe the market's going risk on November, December into January, right? A little food for thought in regards to that. Now, they said September stocks were going to crash. And what did we get? This is September results, and we're about at the end of the month, right? JD stock up 49%, Chinese company. Baba up 30%, Wynn Resorts up 26%, Tesla Mayasa up 21%, Palantir up almost 18%, Nike up 10%, Meta up 9%, Estee Lauder up over 8%, the Qs were up 3%, S&P 500 up 2%. So they said stocks were going to crash in September, and imagine missing out on that. Like, seriously, imagine missing out on that. Like, you didn't want to be on the sidelines in September, but they said it was going to crash, and it just never did, right? So this is some food for thought, as I like to say, right? And it just seems like people are playing the stock market like the way I play roulette. So basically, if I ever have to go down the strip, somebody's in town, they want to go down the strip, they want to, gamble and whatnot. I would usually prefer to play some craps, but if we're going to go something else other than that, I'll do roulette, right? I got a problem. If I do roulette, I have the stupidest strategy. Basically, if I see it come up one color a lot of times in a row, I'm like, oh, let me go on the other color. The odds don't change. It's still 50-50, right? But if I see it like on black 5 straight times, I'm like, it has to be red. It has to be red this time. Let's go red, okay? And the issue, that's fine for gambling. You're screwing around, spending $100, $200. The issue is people are doing this in real life with their portfolios. They're saying like, oh, this usually happens, so it's going to happen. And they like get out of their portfolio or go all the way over here or go all the way over there because they're like, this is what usually happens. And they're playing like how I would play roulette. And it's like, dude, this is real money. Like, this is your like life savings. Like this is your investments. Like, what are you doing here? And people are playing it like it's roulette. Come on. Like folks got to wake up at some point in time. Like, this is ridiculous, right? Now, me personally, I would love the stock market to tank in October. Why would I love it to tank in October? Well, I would love the stock market to tank in October because, one, I'd get to buy stocks at really, really, really cheap prices, right? Very attractive entry points on a lot of stocks. So I would be happy if stocks tanked. I would love to buy all the stocks I've been buying at cheaper prices. Go ahead, tank the market, right? I would love the kangaroo market in October. And why would I like that? Well, a kangaroo market, there's still going to be some stocks that overperform, so maybe I could take some profits in a couple of stocks I've been looking to kind of take some profits in. And additionally, there's many stocks I think are great values right now. And so if those stocks don't move, I'm continuing to be a buyer of those stocks in October, even if the stock prices aren't really moving, right? Lastly, I would love the stock market to blast higher. There's a couple stocks I want to take some profits on, so I wouldn't mind if those stocks blasted higher. And additionally, I want to run some hedges up. And so being that I need to hedge my portfolio likely in October, I'm either going to do it in October or November, I wouldn't mind at all if the stock market went higher. So I don't care what happens in October. I'm set. Stock market tanks, I got a game plan. Stock market's a kangaroo, I got a game plan. Stock market goes up a bunch, I got a game plan. And that's how you got to get to in the market, where it doesn't matter what happens, you have a plan ready to rock and roll for whatever the situation is. Tank the market, awesome. Kangaroo the market, awesome. Blast the market higher, awesome. That's a place you got to get to, because once you get to that place, it's the holy grail of investing, in my opinion, as being an individual investor. When you feel like, I don't care what happens, like I'm set up for whatever. Because I can tell you, most people, they're not really set up for all those different scenarios, right? That's how you got to position your portfolio. So always remember, folks, the short term is going to be what the short term is going to be. Remain focused on long term. Remain focused on building positions that you love for the next 5-10 years. You know, great companies, own 10, 20 stocks that you absolutely love, and call it a day. And the short term will be what the short term is. If the market crashes, you get to buy for cheaper. Phenomenal. If you're high net worth individual and you hedge, you're probably going to make a bunch of money on the downside. Like, you're set up, man. You're set up for whatever happens there. Okay, guys? Appreciate you joining me as always. Pin a comment down there, 7 things to do when stocks are crashing. That's a free workshop for you guys. Make sure you get access to that. I don't shout this out much anymore, but you're definitely going to want to get access to that so you know how to react when you are in a crashing market, which we will have a crashing market eventually. It's just a question of, is it next month, 3 months, 6 months, a year, 2 years, 3 years? Eventually, you're going to have it. You got to know what to do in that situation. Pin comment, free access for it. Much love and have a great day.